You know that investing in real estate can make a lot of sense, but do you have a firm handle on real estate investing's many benefits? From being a good inflation hedge to having a low correlation to the U.S. stock market, from being able to enhance returns using debt to the many tax benefits you can take advantage of, real estate investments have a lot to like. And in today's video, you'll learn the key benefits of investing in real estate to take advantage of them when you see the right opportunity. Welcome to Wealth Matters for Physicians, brought to you exclusively by Altfest Personal Wealth Management, the channel that provides physicians with key investing and personal financial planning strategies. For 40 years, physicians have turned to Altfest to help them plan financially and gain the financial security and future they deserve. We can do the same for you. My guest today is Andrew Altfest. Andrew is president of Altfest, an expert in real estate, and a primary advisor to the firm's clients. Andrew, thank you very much for being with us today on Wealth Matters for Physicians.
It's a pleasure.
Great, so let's get right to it. So today we're talking about the benefits of investing in real estate, of which there are many. So Andrew, which is the first benefit of investing in real estate that you'd like to discuss first?
Well, I think you first want to start with profit. And so how has investing in real estate been, broadly speaking, for investors? And I actually have a slide that I prepared that I think will take us through this, and you can see it in very clear terms. It's been a good place to invest. And when talking about home prices, looking at home prices, since 1996, as you see here, home prices have nearly tripled in value. And when investing in, when putting together a compilation of different real estate segments of the private real estate market and looking at how that has performed against stocks and against bonds, well, real estate has outpaced stocks, outpaced bonds significantly, and done that with taking a lot less risk than stocks and a similar amount of risk compared to bonds. So I think we all know people that have made a fortune investing in real estate. If you look at the Forbes 400 list, there's some people who've made billions investing in real estate. Real estate has been a profitable place to invest. It's a place where you can, with the right strategy, you can profit. You can create current income, which I think a lot of our clients like and a lot of physicians that we work with like. And it also has been a good inflation hedge. And inflation is something that we read about, we think about when we go to the grocery store these days and we see how much prices have been going up. So numerous benefits to investing in real estate, like you said, Mike.
Excellent, thank you very much. So the next benefit that we'd like to discuss are the benefits of diversification. And I've heard that real estate has a low correlation to the U.S. stock market. Is this true?
Yeah, it does. You hit the nail on the head. And I actually have another slide to share with everyone which actually shows how real estate has moved relative to stocks. The correlation has actually been slightly negative. Now, why do I care about that as an investor?
Right.
Well, in an investment portfolio, you want things that don't behave exactly the same. And the more that you have things that behave differently, in this case, real estate and stocks, looking at them historically, they behave differently, the less risk that you need to take in your portfolio, particularly for the amount of return that you're seeking to get. There's someone who won a Nobel Prize for creating this theory, modern portfolio theory. He actually just passed away, unfortunately, a few days ago. But real estate has been a very good diversifier. And that's why, and when you think about it, think about how real estate performed last year. Stocks were down, bonds were down in 2022, inflation was high. That was part of the problem for stocks and bonds. How did real estate do? Real estate did much better. And real estate has been a good place to invest in a higher inflationary environment. So you want investments like real estate that are alternatives to just the traditional stock bond allocation.
Excellent, excellent, thank you. And so Andrew, another benefit that I know you've talked about a lot is if one wanted to, that debt can somehow be used to enhance returns in real estate. Can you explain that a little bit?
Yeah, so debt is certainly a way that a lot of real estate investors have increased the value of their properties over time and the value of their equity in their properties. And so I'll give you a very quick example, and if you want to see how it works, I have another slide that I've created that shows the dynamics of this. If you take $400,000 and buy a house for $400,000,
Right.
all equity, no debt. If the property market increases 10%, you've made $40,000. Now, $40,000 on $400,000, that's a 10% return. Now let's say that you buy $1 million property. You put down $400,000, you borrow $600,000, and the property market increases 10%. Now you have $1 million property that is now worth $1.1 million. You made $100,000. You've put down $400,000, and you've made $100,000. That's a 25% return. So a 10% increase in the property market increased your value of your property by your value of your investment, your return on investment, by 25% versus 10%. So that's the benefits of debt. And debt is how investors who are comfortable taking more risk have been able to increase the value of their properties. You got to be careful because it also works the other way.
I was going to ask, does it work the other way?
It works the other way. So if the property market goes down by 10%, you're going to experience more pain by using debt. And so we tend to be, at Altfest, more conservative, but people who are willing to take, a lot of real estate investors like to take risk. There's one real estate investor who has his whole team where around the office, around where they work, we love risk. So there are people who like to dial up risk, and due to the dynamics of real estate having strong cash flows, plenty of lenders are willing to give investors a healthy amount of debt to use against their properties, and it can produce wealth over time. But just have to be mindful that it could work the other way and not do anything excessive.
Thank you. Good. And also, Andrew, I know that our physician audience, they pay a lot of taxes, and so one thing that might be appealing to them is that real estate can often take advantage of various tax benefits. Could you talk a little bit about some of the tax benefits investing in real estate can offer?
Yeah, you can definitely hit nirvana with tax benefits in real estate, and I'm not going to be able to go over all of them, but I'll go over some juicy ones that I see our clients take advantage of when investing in real estate.
Great.
So first of all, there's something called depreciation. So you can depreciate real estate. Now, I could have a property that's increasing in value, and in the meantime, I could be actually depreciating the real estate according to, in the eyes of the IRS. And so what this allows you to do is, if you have an income-producing property, you're able to have this phantom expense in depreciation that offsets, using the expense offsets the income that you're receiving from the property. And so the income comes in, and normally we'd have to pay tax on that income.
Right.
Whereas the depreciation is allowing you to actually reduce the amount of income that you're realizing. And so the depreciation shield, as some people call it, can be a very powerful tax deferral mechanism. Another opportunity that's out there that we see taken advantage of is through what's called a 1031 exchange. 1031 exchange, there are many ways that real estate investors don't have to pay taxes on their gains.
I see.
The 1031 exchange is one of those ways. So this says, let's say I bought a property, it's gone up a lot in value, I want to sell the property, and I don't want to pay the tax. Well, instead of paying the tax, as long as you buy a like-kind property and you follow the guidelines for doing so, you have a certain amount of time in which before you will lose this opportunity, you have to execute this according to a schedule. You can defer that gain, you can roll that gain into the next property. You can also take advantage of another strategy in which you, rather than having to defer the gain, roll it into another property through a 1031 exchange by selling your appreciated property and buying another one. You can invest in an opportunity zone. Opportunity zones have become popular in the last few years. And what they allow you to do is, as long as you buy the property within a designated opportunity zone, and you hold the property for at least 10 years, when you sell the property, you're not going to have to pay tax on the gain of the property. So now, what is an opportunity zone? Is this in some far off place? No, opportunity zones are lower income census tracts. And if you look just at New York City, if I want to look where we are, we're in Midtown Manhattan right now. If I want to take a look at where the opportunity zones, for example, in Brooklyn, they're in places that you wouldn't even expect them to be. There's an opportunity zone in Williamsburg, Brooklyn, in Greenpoint, Brooklyn, in Clinton Hill, in Fort Greene. I mean, these are places where there are multi-million-dollar properties being sold, yet there are opportunities to invest in opportunity zones, in which, upon the sale of the property, you won't have to realize a gain or pay taxes on that gain. And last but not least, something that we see a lot, and something that I think came into existence through former President Trump and his, perhaps wanting to give a little benefit to the real estate community. You can, and when investing in real estate, you can take advantage of the QBI deduction, qualified business income deduction. Real estate qualifies, and you get a 20% deduction on the income for the gain or the income that has come from the property. Now, this phases out for very high earners, so it's something that we're very mindful of when looking at the income of our physician clients. Some of our physician clients can actually manage their income so that they can qualify for that 20% deduction. But that's another opportunity that exists. It exists at least until the sunset which is scheduled for 2026. We'll see what happens at that time if it stays in law. But these are just a few good opportunities that exist in real estate that allow you not to have to bear the full burden of taxes on the income that you're generating from your real estate.
Great, that's wonderful. And we haven't even spoken about, I know you would, like if it was your primary residence and you were living in it for 2 out of the last 5 years, if you were single, you would be able to take up to a $250,000 tax shield on that profit, or a married couple living both 2 years out of the 5 years preceding, up to $500,000. So that's for like primary residence, but all the ones you were talking about were really good for investing in real estate.
Yes, exactly. Another great one. And if we had another 45 minutes, we can keep going through taxes, but there's a lot, and good opportunities to plan means that the after-tax returns on real estate investing can be even higher.
Well, thank you so much, Andrew, for being with us today on Wealth Matters or Physician. I know you've given our physician audience a great deal to think about when thinking about the benefits of real estate.
And my pleasure. It was fun.
If you'd like to discuss the information explained in today's video, receive a complimentary review of your investment portfolio, or a retirement readiness analysis, or discuss any other personal financial planning area with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732, or by emailing Jesse at his email address, which is in the description of today's video. If you like today's video, please click the subscribe button below and hit the bell icon to receive notifications each time we release a new one. If you think that a fellow physician would find this video interesting or useful, please share it with him or her to help them optimize their finances. Lastly, as always, if you have topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we'd love to hear from you, so please enter your comments in the comments section below. Well, that's all for today, physicians. Thank you very much for watching today's video, and I look forward to being with you again in our next one. Until then, be well, and remember to keep on optimizing your finances, or let us help you if you'd like.